Hello, I'm Dick.
And I'm Eric, and we're the Annuity guys.
Eric, this is an everyday subject for us when we're talking to folks on the phone about what's better, a hybrid annuity or a variable annuity, because there's a lot of sales agents out there that are really pitching these variable annuities.
Well, as the accumulation specialist, as we call
easy for you to say.
So you say, a lot of times that's the only type of annuity they've had access to.
Right.
So what better way to give you an annuity than to give you a
Well, and that
annuity?
speaks to some of the volume of variable annuities that are out there. There's a lot more distribution channels for those. But recently, the hybrid annuity over the past 5 years has just gained tremendously in popularity, and variable annuities sales have been dropping, and just the opposite, the curve's been straight up for the hybrid or fixed index.
Yes, exactly. And I guess we should probably differentiate between what the difference is between a hybrid style.
Break them down simple so folks can understand.
So we've talked about the hybrid being built on the fixed annuity chassis. So you've got the guarantees, no backup, the principal's protected. That's the cornerstone of kind of the hybrid model. You a lot of times get an income rider, which is the part that guarantees the income for life.
Right.
So that's your basic on the hybrid stuff.
On the hybrid.
Now the variable annuity, it's really built on a more of a mutual fund platform, I'd like to call it.
I agree.
Where you're getting your underlying sub-accounts, you're actually investing in the stock market, in securities, in mutual funds and ETFs, some of the newer accounts. So that's the cornerstone of the variable annuity. They both have tax deferral aspects, so they're similar in that way. But then you get to add little rider pieces onto each one to make it's like picking options on a car. You want flames on the side. You want
So if we're to summarize and just kind of simplify between the two, folks, on the fixed indexed annuity, which is the hybrid style annuity, the company accepts all the risk on that. There's no risk at all to the client.
Right, the investment risk.
Exactly, all of the investment risk.
Yeah.
And with the variable annuity, it's just the opposite. The client, the annuitant,
good luck with those investment choices.
All the risk. And there can be reasons, why folks would choose a variable annuity.
Oh, sure.
But let's talk about what's driven the popularity recently of the hybrid annuity, and what's driven down the popularity of the variable annuity.
It's pretty simple. If you don't want to lose money, and that's the caveat with the fixed indexed or hybrid style, you don't want to go backwards.
Your principal is protected.
Your principal is protected. So if you have another 2008 roll up on you where the market drops 30%, well, guess what? You get the zero maybe, but you don't go backwards.
Exactly.
So,
and what the other thing, Eric, there's several other things that I want to mention here, but one is that the guarantees for the variable annuities over the last 5 years have continued to drop considerably, and the guarantees for the hybrid annuity have continued to increase. And that comes down to simple mathematics, folks. The variable annuities have sub-accounts that lose money. The fixed annuities have...
But they can gain money too.
Yes, they have unlimited upside and unlimited downside. But the fixed annuities and the fixed indexed annuity, the hybrid annuity, is invested in very safe investments, government treasuries, investment grade securities, and it's very regulated, and that's why they can give the better guarantees, because the underlying investments aren't at risk in the way that a variable annuity
and they
is.
sometimes people get confused because you hear the indexes, and a lot of the indexes are popular securities terms like the S&P 500, the Dow, the NASDAQ.
Right.
Well, you get to select an index perhaps to participate with, but your dollars are not actually invested in that index.
Exactly.
The insurance company's taking care of you, and they're sharing the benefit. So you're not going to go back.
And this is where we use the term market-free.
Right.
Because a market-free annuity means that you have no market risk at all, and so it is a market-free hybrid annuity.
Right.
And the other determining factor that I think separates the variable and the hybrid are the fees.
Oh, yeah.
Yeah.
Well, and on the hybrid style, you'll see typically fees of no more than 1%. I mean, occasionally now
occasionally a little more.
And we're starting
sometimes
to
no
see
fees.
No fees.
Yes.
Now, and we should be fair, we're starting to see some spread fees starting to come up on the hybrid style that more recently that are, right around 2%.
But they give you more upside.
Right. You're getting the no cap version.
Yes. And so if we compare the variable to the now stop laughing. No, but if we compare the variable, it's somewhere in the neighborhood of 2% to clear up to 5%. I mean, 2% is kind of hard to find unless you're going for the
discount brokerage,
the discount brokerage,
the Vanguards, the Fidelities that are less than 0.5%. But they don't have the other rider add-ons. They don't have the guaranteed minimum death benefit or the guaranteed minimum income benefit.
But that would be a place where a variable annuity would fit very well. Someone that's a little bit younger, has money outside of IRAs and 401ks.
Yeah. Well, usually you've capped off those contributions. You've maxed those. You still want to contribute to some place where you're going to get tax deferral. Well, here's another avenue for you to put unlimited amounts of money into
folks
an investment.
Folks that really like to trade a lot, they like to be active management. They don't want to pay a lot of tax. They can put that into that variable annuity shell, and especially, like you say, at a Vanguard or a Fidelity or something, there is no load, no commission paid off of it, and the actual fees are very, very small.
Right. I mean, you have to have a mortality and expense fee.
Yes.
And that's what every one of them has that piece, I believe, and so you're going to pay that no matter where you are.
Yes.
That's what makes it an annuity.
Yes.
Yeah. So that keeps it tax compliant.
And I did say no commission, and there is a possibility that they've worked a commission into it somewhere for somebody. So,
and most of the bigger players do have. You have to realize it's the fees are kind of added on a block at a time. You know, here's your M&E, and then you add this for your income rider, and this for your death benefit, and this. For
many times you're not looking at all of the fees. You know, you're looking at a portion of the fees, and you have to look at all of the fees, and it's kind of surprising how high the fees can get.
Well, and as I say, and then what you don't really typically realize is that each of those sub-accounts also has a fee associated with it as well. So depending on your investment selections, you could be paying even more than what you think you're being disclosed to.
Eric, would it be fair to say that folks that are maybe a little on the younger side might want a good no-load variable annuity, but when you start getting up near retirement and you're more concerned about maximizing income and being very secure with your principal, that a hybrid annuity typically makes more sense.
Yeah, I'm a big fan of hybrid annuities for people that are I say within 10 years of retirement, because I call it the Ronco.
Or right in retirement.
The Ronco theme of retirement, where you can set it and forget it based off the guarantees.
Yes.
Now, you can do that with a variable annuity as well, because you can buy one with an income rider and say, hey, you're going to get this. But a lot of times you're being sold the potential there.
Yes.
You're saying, hey, you know what? You're going to get at least a 6% roll-up or a 5% roll-up.
Right. And if you compare the contractual guarantees, what you can rely on, very seldom have I ever seen a variable annuity beat what's now available in the hybrid annuity.
Yeah. And what I don't like is you see a lot of variable guys say, well, here's the best thing. When you start taking income, when the market goes up, you get an increase in your income. But when you look at the actual facts, when you start taking out your 5 or 6% withdrawal combined with 5 or 6% in fees,
even if it's a 3 or 4% fee, you put that with a 5% or 6% withdrawal. How in the world is the market going to continue to? You're not going to see that gain, and that's what I hate to have people told that,
because it's your principal. You're withdrawing your principal. You have to get a 15% gain almost every year.
Well, they're not lying. It is possible.
I know, but
they're definitely not maybe saying what's probable.
Right.
Because probability is not very good that you're ever going to see an increase.
Right. So it's just be aware of what the simulations show you. Yeah, the rosy pictures are rosy for a reason, but just be a realist that when you turn on that income, it's probably going to be pretty close to that amount for the rest of your life.
Right. So if you stick with the contractual guarantees, folks, you will not be disappointed, and you just have to fairly compare the two.